Okay, so what I'm feeding into now is that equity markets, the great predictor of the future, are rallying, and everyone's really excited excited by that. So here's some of the sobering news I'm about to give you. That stock markets, on average, bottom 3 to 4 months before the end of the recession. So if we were to believe the stock market as it is, as we're seeing at a high level, then there is no recession and we move on. Or we could take the view that it's different this time. But what we can see is that we should be doing some thinking. This is the UK's. This is a chart showing the 1918-1919 pandemic, and you can see there was a first wave, then there was a bigger wave, and then there was a third wave. So we could argue that it's different this time, but historically, we know that these pandemics have more than one wave. So we've had one. Are we going to have another one? Let's just think about that for a moment. And we move on to the next chart. Okay. So if we start having a look at valuations, have a look at your global price to book valuations in 2020 on the right hand side of that chart. They're falling. And if we have a look at earnings, they've fallen off a cliff. So let's move on to the next chart. Sheree, can you move to the next slide, please? Okay, so why is the market rising? An oldie but a goodie is because there's more buyers than sellers, right? Every morning when I used to sit in a stockbroking business, someone had asked the question, why did the market go up yesterday? And someone would always chirp up with more buyers than sellers. Well done, congratulations. Liquidity is a reason that the market has gone up, and I've put that chart over there of expansion of central bank balance sheets, and you'll see the Fed has the greatest expansion, and the dear old RBA, it's sort of down there in the bottom where no one cares, but the Fed, they've done a fine job of expanding their market activities.